In this video analysis, I'm going to talk about multiple time frame analysis and the most common mistake that every trader is doing. And what I'm trying to say is that a single time frame is not enough to make a trading decision. And I see most people out there using the daily time frame or even smaller time frames to make their decisions without using the bigger picture, the larger time frames and directional trading, because many traders out there believe that directional trading is useless, and that's also the reason why you will see many option traders using like all kind of option strategies that disregard completely the direction of the markets, and that's fine. I mean, any strategy can work. Supply and demand, the one that I'm using to place my trades, is a different strategy. Okay. So, but it tells us with laser beam accuracy what can happen and what will happen even months and years before price reaches certain price levels, like this one over here or this one over here, because we are expecting this. And this is Kohl's Corporation. This is an American apparel store that is like a family-oriented apparel store. I mean, I've got a description here that they sell like footwear and accessories for women, men, children, home products, beauty products, and accessories. Okay, they've got quite a few stores, and it's headquartered in Menomonee Falls, Wyoming, probably, or I don't know, one of those states in the US. I'm not sure. I don't care where it is headquartered, because what I do care is about multiple time frame analysis, which is what this video is all about, and the strength of the imbalances. So here, at this area over here, this blue rectangle, okay, represents a monthly demand level, an imbalance. And look at the strength of this imbalance, okay? This is Kohl's Corporation, you see, as I said before. And this is the monthly time frame, 1M. You will always see on my watermarks that the center of the screen shows the name of the company, the time frame, and the ticker. Okay, so this is every single candlestick represents 1 month of time, and on Kohl's, okay, we are expecting this. From this imbalance sitting at $21 per share, we're expecting price to rally all the way up here to the supply level located at $57 per share and eventually break it. The same way that this over here was broken by this impulse. So it has gained control over here, but let me go and analyze the smaller time frames. When you use the daily time frame, which is, I think, okay, I don't have the data to assess that, or to assess that. Most traders use the biggest time frame they use is the daily, okay? And they use like indicators and EMA crosses, overbought, oversold, maybe Bollinger Bands like this. When they penetrate the Bollinger Bands, they will buy, blah, 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 okay? But here, take a look at the daily. Super strong bearish impulse here that happened during March 2023. And then it gets weaker, and then now gets stronger. Now it looks like it gets stronger, and suddenly a high is printed. Another one, and then another one, and then it retraces, okay? So why is that happening over here? Because like I said, one single time frame is not enough to make a trading decision. You need to put all the pieces together from several time frames to assess and to decide, okay, what we are expecting from certain price levels, and how long it will take for price to rally or to drop. So here, on the monthly time frame, this imbalance was created at the end of November, or it started to, okay? And then it stopped here, these highs, in June 2021, and it took more than a year, okay, to reach this imbalance. So why are you seeing now the daily rallying like this, like crazy? Because this imbalance on the monthly, the strongest one in years, okay, has taken control. So the expectancy for this apparel store, KSS, Kohl's Corporation, is for the stock to rally all the way up there. It's like 161%, okay, and even higher, but I don't expect we should not expect this imbalance to be eliminated without pausing here. Probably this will happen, okay, and then we'll attack it once, twice, and then it will be eliminated. But that's what we are expecting in the long term. But if you are not aware of what the bigger time frames are telling you, and this is not support, okay, this is an imbalance, it has nothing to do with support, okay, or resistance levels, okay. This could be a resistance level, or you could say like it happens from the past. I don't know. I mean, you could say that this is support. I don't know. If you draw like a random line through the chart, okay, you will say, okay, this was resistance. Now here's again. Now here's like support, no breaking. I'm gonna draw another one over there. So support, support, resistance, resistance, like resistance. Okay, resistance is support, resistance, resistance. So a random line drawn on the chart will almost always imply there is a level of resistance or support. Okay, that's how I see it. That doesn't mean that you cannot use support and resistance to trade. Don't get me wrong. Okay, it's just another way of trading, the same way that using EMAs, crosses, MACD, Bollinger Bands, CCI, oscillators. I mean, there are multiple strategies in smaller and bigger time frames, or intraday, swing, and long term that you can use to make money and to trade stocks and forex and cryptos. And supply and demand is just one of many. Okay, but how come a next salsa instructor, dancing instructor like me, photographer and web designer, can predict the exact movements of these stocks with such an accuracy? If I can do it, then you can do it as well. Obviously, I have no financial education. Okay, everything I've learned has been self-taught. I took something from, obviously I read about candlesticks on the internet and strategy and all that, but all the rules that I'm using to take these trades and to predict these movements, and these movements, they are all made at Alfonso Moreno's head. Okay, my head. So here, what I'm trying to share with you is this prediction. Obviously, okay, KSS could do this and we would incur in a loss. But if we are long on this position, and some of the members, so don't forget, members should be long, we should protect our position. We should not let this happen. So at least we should place our stop loss here, like to have to incur in half a loss, even a little bit less of a loss. Okay, but there is a potential to triple, quadruple your investment in a few months. Okay, and this is investing. Okay, it's trading, but it's also long-term investment. So if you take a look at the smaller time frames, you will see now that the 1 hour time frame is like creating new very strong impulses. Now it's getting weaker. Okay, there is a strong imbalance right there on the 1 hour. Okay, that hasn't gained control yet. This could be the moment where calls retraces again. Okay, so, but here, one sec, on the monthly, this is where the 1 hour is. Okay, it could drop all the way down there. This is like, let's say, let me do this comparison. Okay, we've got a target here. Imagine you are an archer and you are competing, throwing those, maybe for the Olympic Games, okay? So you are sitting like maybe here 100 meters away and you are trying to hit the target in the center multiple times. Otherwise, you will never make to the finals. You won't be the Olympic champion, okay? In this year. So you are trying to hit a target, the center of it, okay, in a smaller time frame, 1 hour, 50 minutes, okay, by shooting from these positions very far away from the target. So what I'm doing is something very different. I am sitting, okay, with my arc position to throw it, okay, at 10 meters or 5 meters. And I don't need to hit the center of the arc. I just need to hit the target. No matter where, but I want to hit the target. So what do you think are the chances, okay, of me hitting the target standing from 5 meters away from this huge target? Is it higher probability that I hit anywhere on this target? Or is it higher probability for me if I am standing at 100 meters away from the target and hit the center of that target? So obviously you already know the answer to that question, okay? It is very likely, almost impossible, not to miss the target if you are standing at 5 meters from the target and you are allowed to hit any part of the target. But if you want to hit the center of the target and you are like here at 100 meters, okay, every single time, that's trading the smaller time frames, okay? That's how I see it, okay? It's my opinion. You could disagree with it. But what if I tell you that I will be standing at 5 meters from the target and I could win if I only hit the target anywhere within its perimeter? So who do you think has more probabilities or winning? I believe the guy sitting at 5 meters, because I am allowed to hit every single part of the target, whereas the smaller time frame trader, okay, which is probably a scalper as well, has to hit the center of the target every single time to be right, okay? So, but that's my opinion. You obviously could disagree with it, which is fine, it's perfect. The world is happier when people disagree and can argue about different outsets and different opinions, different ways to do things, okay? But that doesn't take away the truth for me, okay? And that you will see probably in the following months, that this is what we're expecting. And if you happen to be long from here or from half of the imbalance, protecting your investment there or right now over here, you already have like only risking half of your position. And now probably this will happen, hopefully will, and we will have hit the target anywhere. I mean, even in the outer parts of its perimeter, and just happily holding this position, expecting this to happen in the following months. Okay, so knowing that, you can use option strategies to sell premium, or you can buy also. Okay, but always bear bullish strategies. Okay, because this is what we're expecting. In the smaller time frames, as I said before, the 15 minutes right now, it's creating strong impulses, and for now there is no like signs of price going higher. But these highs on the 50-minute chart is broken, probably is going to start happening again because we have the support of bigger time frames. And remember that one single time frame is not enough to make a trading decision. You need to use several time frames to sort of create like a wave of probabilities and to support a particular direction for the stock. In this case, for KSS, Coles Corporation. If you like this video, make sure that you click on the subscribe button and you click on the like button. That will help me record other videos like this. Have a great day. Bye-bye.